from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Hyde in New York, in for Emily Chang. This is Bloomberg Technology, and coming up in the next hour, Bitcoin jumped past 32,000. That's as Elon Musk admits both Tesla and SpaceX own the cryptocurrency. This is just a day after, of course, crypto's drop about 50% from its April peak. We talk about the volatility. Plus, Salesforce completes its acquisition of Slack as the company looks to further transition into the digital-first world. We talk to Salesforce President Bret Taylor about the future of hybrid work and how Slack fits into the overall business model. And what to do with Will Smith, Odell Beckham Jr., Ashton Kutcher, and Kevin Durant. What do they all have in common? Investing in fintech startup Titan Global Capital Management, whose end goal is to become this century's answer to Fidelity. Our conversation with the company's co-founder later in the hour. We'll get to that in a moment, but first, let's get a look at the markets. Here's Kruti Gupta.
Absolutely, Caroline. A green on the screen kind of day, risk on across the board. Let's just take a look at this. The S&P 500 up 0.8%. You didn't see a ton of tech outperformance, but tech was still in on the rally. You always want them on your side when it comes to a broad rally like today. And of course, yields higher as well. So really telling you that massive bid we saw for treasuries didn't really last today. Some money coming out of treasuries, going into stocks apparently. But what is behind all that green on the screen, Caroline? It has to do with technicals in particular. The S&P 500 actually bouncing off of its 50-day moving average. I believe we have a terminal chart here that we can show you, of course, on GTV Go. You see right here that pink line is that 50-day moving average. Right on the right, you start to see that S&P 500 bouncing off. And it's kind of been a trend, a very crucial indicator for that, not just the breadth of the rally, but when you start to see a buy the dip mentality. I want to show you some of the other parts of tech that also caught the bid, because like I said, it was a broad rally. We have the semiconductor index up a whopping 3% at the bottom. Even Chinese tech ADRs in on it, up over 2%. It was, however, not such a great day for NASDAQ Biotech, up only 0.3%, but hey, they were in the green, so let's count that as a win, Caroline.
Let's. Kruti Gupta, we thank you so much. All things in your market moves. Now let's return to the Bitcoin bounce, the cryptocurrency rebounding today after Elon Musk, Jack Dorsey, Cathie Wood discussed the bull case for Bitcoin at an industry panel.
I really do believe that Bitcoin will be much more environmentally friendly, certainly than traditional gold mining or the traditional financial services sector. In many ways, it already is.
What about letting Twitter advertisers pay in crypto?
Any form of payment that they want to use, we should be able to take. So okay. Absolutely, but I'm more focused on like how do we create economic incentives in the network itself without having to rely on advertising.
Quite the lineup, and it's certainly got everyone talking across social media. Let's talk about the volatility that we've seen of late. Sunny Singh's with us, Chief Commercial Officer over at BitPay. And of course, a lot of this music to your ears, offering Bitcoin wallets, offering Bitcoin payments and the like. What did today's panel mean to you? What is currently the mood music around Bitcoin mean for you? Oh, I think we're having some technical difficulties with Sunny Singh, unfortunately. We'll be getting a little bit more from him in a moment. We'll redial, don't worry. Meanwhile, we're going to be discussing the deal done. We'll be joined by Bret Taylor, President and COO of Salesforce, as the company completes its $27.7 billion acquisition of Slack. We'll talk to Bret Taylor next. This is Bloomberg. So Salesforce has announced it's finally completed its acquisition of Slack. Salesforce has said that the buyout will help to create, a digital headquarters for success from anywhere in the world. It comes as many corporations continue to transform into more of a hybrid model post-pandemic. Salesforce President Bret Taylor joins us now. Bret, it is wonderful to have some time with you. And it was really interesting reading the press release, of course, finally this deal being done, but painting the picture of what work is going to be like in the future. And you're saying this is a once-in-a-generation opportunity to rethink, reshape how we work. How do you feel that your joined up approach is going to achieve that?
Well, I think, our HQ is no longer on Main Street or Madison Avenue. The new HQ is in the cloud. And I think the opportunity of this acquisition is you bring together the digital HQ that Slack represents with Salesforce's Customer 360, which is the platform for digital sales, digital marketing, digital customer service. And it really represents this operating system for every single company to get back to growth in this all digital work anywhere world. And certainly, despite some of the setbacks of the Delta variant, growth is the #1 thing on every CEO and every board's agenda right now. And we're just so excited to partner with our customers and help them take advantage of this unique moment in the economy and get back to growth.
Get back to growth. I mean, talk to us about how companies are innovating, using your platform, being able to talk with clients, being able to talk with their own employee base. Are there ways in which you think it's being deployed the best right now?
The interesting thing for me is just the breadth of it. So, if you just take sales as an example, the traditional sales is going on an airplane and selling in a conference room. Now that's happening over Slack and it's happening over Zoom. Take a call center. That used to be a building. Now this thing exists in the cloud. How do you actually resolve cases digitally? It's over technologies like Slack. If you talk to any retailer in the world and you talk to them about Cyber Week, the most important week for sales for every single retailer, their command center is in Slack. So I do think that we're seeing companies take advantage of this, and these are the companies that are growing right now. They're really transforming their cultures around these new digital technologies. But I think the most interesting thing is because of this pandemic, every company is going through this. It's a digital imperative right now because in 2020, if you didn't have a digital business, you didn't have a business. And I think that this pandemic really accelerated the digitization of the economy by probably more than a decade. And I think Slack and Customer 360 are really more relevant now than they've ever been in our company's history.
So how do you continue to innovate? How do you keep product up to speed with the need that is clearly here?
Well, it's really interesting because it's so hard to predict the future right now. I've seen on Bloomberg, some CEOs come out and say, we're all going back to the office. I've seen others saying, we're not going to have any offices anymore. So I do think the future of the workforce is being written right now. But what I can tell you is we have the most relevant technologies to help all of our customers navigate that new normal. And, I think the interesting thing right now is it's not just about the technology. We're truly changing the way that we work. I think you hear about things like Zoom fatigue. What it means to actually have a digital HQ is really a new way of working. And what I'm excited about is seeing really forward-leaning CEOs in every single industry really reimagining their businesses, recognizing that this shift the past year from doctors' offices to telemedicine, the shift from the commute being on the freeway to being in the hallway, these are incredible opportunities for forward-leaning companies. And, our goal is to invest the best and brightest engineers, the best and brightest product thinkers so that we can be partners, really trusted digital advisors to every company in the world as they're navigating this.
But of course, there's plenty of competition. How do you see that environment, that ecosystem? Is it winner takes all? How do you see you continuing to evolve alongside the likes of Microsoft, for example?
Well, I certainly don't think software has been or ever will be winner take all. I mean, the software is just a growing opportunity for every industry and every business, just as the economy digitizes. And our competitive strategy is simple, which is focusing on our customers' success. And we have such a unique value proposition to our customers. No company has a more complete solution for the new digital economy: digital sales, digital customer service, digital marketing, digital commerce, the #1 digital platform for the new way of work in Slack. So our strategy is simple, which is how do we package up Slack and our Customer 360 to help our customers navigate this new normal? And we think by focusing on our customers, we don't need to worry about competition, and we can continue to grow our business.
Globally, how are you looking at growth and expansion?
International expansion has been such a huge part of the Salesforce growth story over the past decade. We've really focused on, all the major markets for enterprise software, and this is no different. The one interesting thing about this pandemic is how it's impacted different parts of the world unequally. And so really recognizing that, every single one of our major customer hubs is really in a different stage of reopening the economy. So we really have to remain agile as a company to match that. But the one thing I will say is this digital imperative is a truly global phenomenon, really impacting every single industry in every single segment in every single geography of the world.
It's, of course, interesting in your press release that you say work life to help make work life simpler, more pleasant and more productive. Talk to us about making it more pleasant when people are going to be more remote. For some people, they thrive in that situation. For others, it is harder, and it's trying to find that balance that we're all, after a year and a bit, still trying to strike. How do you go about trying to help that, the people who are using your screens and getting fatigue, as you say? How are you looking at that?
Well, I like to say digital translation is different than digital transformation. When most of us, first were asked to stay home for our work, we did a translation. We took every meeting that was in a conference room and we moved it to video conferencing. Digital transformation is bigger than that. It's really about transforming your culture around these new digital tools. And if you look at what are the things that we can accomplish this year that were impossible before, maybe we can recruit more talented people from more places. Maybe we can give our employees more flexibility so that we have higher retention, better mental health. Maybe we can reach our customers in new ways. Maybe we can get a competitive edge on our competitors by embracing new digital channels. So what I'll say is I think the next few years when working from home is no longer imposed upon us for health reasons is forward-leaning companies will really saying, how do we actually transform our culture? Take what was great about these new digital tools and embrace them. And that's not going to look like a translation of the analog way of working. I think that's the real challenge for leaders right now.
Bret Taylor, great to have some take from you as a leader, president and COO of Salesforce. Great to have some time with you. Thank you. Let's get back to our previous conversation on Bitcoin. Bring in Sunny Singh, Chief Commercial Officer at BitPay. Sorry for some of the technological issues amongst us, Sunny. Talk to us about the volatility we've seen in crypto of late. Bitcoin in particular, of course, you offer ways in which you can pay with your Bitcoin. When you've seen a 50% drawdown in the price, how much are people willing to spend it?
Yeah, Carolyn, great to talk to you again. Thanks for having me on. And yeah, I mean, you do see these volatility spikes up and down. That's the crypto industry we've been in. I've been in the space for over 7 years now. So we do see a little bit of drop in Bitcoin payments at our merchants like Microsoft, AT&T, and Newegg and things like that. But overall, again, the upward trend is that it's a long-term vision of crypto, and these merchants believe that, hey, we might get 1 to 5% of our share of checkout right now through crypto, but 3 years from now, it's going to be 10, 20, 30% actually. And that's why you're seeing companies like Square, PayPal, everyone try to get in the space right now for payments. And Jack Dorsey said in the previous segment, it's all about payments, accepting payments from any currency in the world. That's what he believes in, and that crypto is the currency for the internet.
Of course, Square innovating more hardware around crypto, more wallet offering, more ability to spend. Is that a competitive threat for BitPay, or can you all
No, I think that's great, actually. The more people that have crypto that hold it securely, the more they're eventually going to want to start spending it, actually. So, again, you're going to see a lot of crypto has a lot of different use cases for different people. Some people use it just for store of value as digital gold. Some people use it as a way to, hedge against their own currency, a government currency. Some people use it to spend money online. Some people use it for remittance, cross-border payments, et cetera. So the more use cases, the more providers in the space, the better it is for the whole ecosystem as a whole.
How much is Elon Musk a help or a hindrance to the space?
I think it's great. I mean, you had Elon Musk, Jack Dorsey, Cathie Wood today. It's like a triple crown of speakers talking today about crypto, and they all have their different beliefs. That's why I talk about crypto. It has a different belief depending on different use case, depending on where you are in the world. So all three of them had a different vision on why they loved crypto, and that way is what makes crypto so great.
It's interesting, though. We've talked to here on Bloomberg TV is the arrival of institutional money and how you need institutional adoption, and in some sort of like analogous way, you need to centralize it to then have everyone take forward the decentralization mantra that is crypto in some way. We had Scott Minerd on just earlier, of course, one of the biggest money managers out there, key man over at Guggenheim, and he's saying, look, Bitcoin's going to go to 15,000. This isn't the right time to be buying. How much is that a worry when institutional money is still waiting on the sidelines? They're not quite ready to get in.
Yeah, no, I think it's a great, fair point. But again, 3 years ago when Bitcoin had its big drop, everyone thought, this is the end of Bitcoin. This is the end, sky is falling. And now we just had this 50% drop. The institutions that got in 6 months ago, a year ago, like Fidelity, Tudor Jones, et cetera, none of them have sold. actually all of them have just reiterated their belief that we are long-term holders of Bitcoin. We think this is the future, and we don't mind this recent price drop. That's why I believe, actually, I think by the end of this year, Bitcoin will break its all-time high again and break past 70,000 this year. I don't think it might not get to 100,000, but I think it's to break 70,000 this year.
Is Bitcoin the future, though? Like Scott Minerd, of course, has been thinking long and hard about this, thinks maybe Ethereum's more viable. You had Elon Musk talking about how he's not so enamored by Bitcoin, but he's certainly looking more, he's a holder of Ethereum. What do you think becomes the ultimate currency?
So it's hard to say. Again, I think currencies have different use cases. So Bitcoin, I think, is clearly a digital gold alternative, and that's becoming more and more. Will it become used for payments? We'll see. I think also you're seeing a lot of talk around stable coins. Visa and MasterCard are very big into stable coins. Circle just announced an IPO last week. It's all about their stable coin, USDC. So as stable coins get more popular, that's going to provide more use case around the payments use case. And Ethereum is more around smart contracts and all that. So each currency has a different use case. But you're going to start seeing these use cases get evolved more and more, and stablecoin is going to be a big buzzword now for the next couple of years you're going to hear about.
Certainly is over at the Federal Reserve as well. BitPay's Chief Commercial Officer, Sunny Singh. Really great to have some time with you, as always. Thanks for joining. Meanwhile,
Thanks,
later this hour, we'll hear from the CEO of a fintech startup that's got some big name backers, including Hollywood A-listers like Ashton Kutcher, Will Smith, Jared Leto. Meanwhile, some sporting stars like Kevin Durant, Odell Beckham Jr. Find out what's got them all interested in this particular company. And a reminder that we have a blockbuster day of tech earnings on Thursday with Intel, Twitter, Snap, all out with their quarterly reports after the bell. Make sure you tune in for all the details and analysis. We have more of those earnings coming straight after this break. This is Bloomberg.
When we came out with the pricing for the vaccine, when we identified a lead candidate, we discussed early on about offering that at not-for-profit. We did not want access to or cost to be an issue for folks when they're considering getting vaccinated or not. That will come to an end probably towards the end of this year.
Johnson & Johnson CFO Joseph Wolk speaking with Bloomberg TV after the pharmaceutical company posted a strong quarter. He said it was too early to project how the shot will perform next year when J&J begins selling it on a for-profit basis. Meantime, Johnson & Johnson, along with 3 drug distributors, have agreed to pay $26 billion to settle thousands of government lawsuits, blaming them for helping create an opioid crisis. The settlement marks a major step forward in litigation over the highly addictive drugs, which have been blamed on more than 500,000 deaths over 2 decades. Now, let's shift gears but stay in the world of healthcare, because IVF, or in vitro fertilization, has been around for almost half a century. And as technology advances, so too are improvements in the very delicate process that gives people the chance to create life. One company, Tomorrow Life Sciences, has developed the first automated system to store, track, and monitor frozen eggs and embryos during the IVF process. It also announced the completion of a $105 million Series C equity and debt financing. Joining us now, Tara Comont, Chief Executive Officer. TMRW, or Tomorrow, how do you like to say it?
Tomorrow.
Good. I think it's fascinating. You've just been raising money, and congratulations, 100 million in excess of in a Series C equity and debt financing. What do you want to do with that sort of money? How do you want to continue to spread the word about what you're trying to achieve over at Tomorrow?
Yeah, absolutely. Well, this is a part of the IVF lab that really hasn't seen technology or innovation over that almost that entire period that you talked about. So almost 40 years. And it's really, we're at a point now with the speed and the growth that we're seeing in demand for fertility services, whether they be help with infertility or help on a proactive basis with fertility preservation and women freezing their eggs. The sheer scale and the demand of specimens that clinics are now having to keep up with is really unsustainable in terms of how the existing infrastructure can handle it. So we're talking about millions of frozen eggs and embryos today being managed by IVF labs, which will evolve into hundreds of millions over the coming decade. And you just showed a shot there of the manual analog, hugely outdated process with, you saw the handwritten labels, that is still in place today to deal with this incredible scale. So Tomorrow Life Sciences brings the first automated platform for the tracking, the management, the storage, and the monitoring of those millions and millions of precious frozen eggs and embryos at the heart of nearly every IVF procedure, and replaces those outdated systems. It brings technology and innovation and this piece of the lab into the 21st century, setting a new standard of care for these precious eggs and embryos.
It's sort of extraordinary that over the 40 years, it hasn't been discussed more. The taboo in some ways still is there. I myself was an IVF child, and that has now, we now know so many people, friends, family members who are depending on this technology. How much of a hard or easy conversation is it to have it with venture capitalists at the moment? Do they understand the need that's there?
I think we're at a stage today, and this will increasingly continue, where we all know someone. You know, you're an IVF child. There are going to be more and more IVF children. I'm an IVF mother. I think we all know someone going through the process or thinking about going through the process. To some degree, I think social media helps in that respect. I think we also live in a world where transparency is demanded. It didn't used to be the case, but transparency is now demanded by consumers and patients. And I think that the investment community, the VCs or anyone else, the investment banks, so on and so forth, I think everyone sees it as a human being, as a user, as a potential patient. So it's definitely understood, I think, or certainly I think it's becoming better understood. And I think there's generally a lack of, there's surprise at the extent to which this existing infrastructure just hasn't kept up with the demand. And we're really at a point now where it's an inflection moment. Everyone is talking about it. It's great that the taboo is being removed, but now we've got to help these clinics bring this lab into the modern day, because it's time. It's time. We can't be dealing with a system that was ultimately born out of the barnyard. Yeah. We've got to be using technology. It's just the current system can't cope.
Fascinating conversation. Wish we had longer. We'll speak to you again, I'm sure. Tara, comment. I mean, amazing C-suite, rare all-female leadership, and of course going out there and raising money from some really key backers, the likes of Peter Thiel and the Wojcicki sisters as well. We want to thank you so much. Tomorrow Life Sciences, their CEO. Now, coming up, revenue forecast for Texas Instruments stirs concern over demand as the global chip crunch continues. We'll dig into the numbers next. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in for Emily Chang. And let's get back to the markets. Bring in Bloomberg's Kriti Gupta, another risk on day.
Absolutely, a risk on day broadly, but on the individual basis, it was a little bit of a mixed picture. Let's just look at Netflix here, because after reporting second quarter earnings and a less than ideal subscriber forecast for next week, the analyst was saying 5.9 million new subscribers. They only came up with 3.8. So you are seeing Netflix shares down during the day. Let's see if they can recoup some of those losses going into tomorrow's trading. I want to also hit NVIDIA, because this is going to be 2 days out from their stock split. It looks like it's serving them well, Caroline, up 4.3% in trading today. And that brings me to Intel. You have earnings for Intel tomorrow, and looks like investors are baking in some good news, trading in line with that market action. So let's just zoom out for a second and talk about semiconductors broadly, because I want to show you a year-to-date chart. We know there's a global chip shortage. We know that semiconductor stocks have been high in demand, those chips in particular that take 3 months to make and then eventually end up in your iPhone, your car, your airplane, whatever. The stocks index steadily increasing higher, but you're not seeing that major kind of gains that you saw in the previous year. Maybe they could possibly change that. So let's go micro again and come back to the earnings story for Texas Instruments in particular. It is under pressure after hours, releasing earnings. But really what kind of spooked investors is this idea that they said inventory fell below desirable levels, in addition to the fact that they missed those estimates. So once again, down 3.8%, likely to translate into tomorrow's market action too, Caroline.
Kriti, thank you so much, Bloomberg's Kriti Gupta there. We'll dig into a little deeper those Texas Instrument earnings, the company giving pretty wide range for its revenue forecast, indicating uncertainty about whether a jump in chip demand caused by the pandemic is actually going to continue. Let's get the inside track. Ian King joins us some more, man who covers all of these things. And the demand, the tangibility of the demand, the reality of it, is it there?
Yeah, I mean, that's what Texas Instruments executives were asked continuously on a conference call for 45 minutes, and their answer was, we don't know. You know, in the most recent quarter, revenue was up 41%. That's great. But that's really the key of what's going on here is like everybody, at least the analysts and the investors that cover the chip sector are like, look, we've seen this picture before. It always ends badly. It can't be sustainable. And TI wouldn't really give them an answer one way or the other.
And why wouldn't it be a reality at the moment? What do they feel people are doing? Is everyone so sort of hurt and by the fact that they'd run out of chips that everyone's now stockpiling them in some way?
No, you said that perfectly. That is the underlying concern, and that's what we've seen in the past, where you have this phenomenon of what they call double ordering. It's like I'm going to order twice as much as what I need just to make sure that I get what I need, and then I end up with this big pile of unused chips, and then I stop ordering completely. We've just, we've seen this movie over and over, and that's the concern. TI are like, our inventories are going down. Don't know what to worry.
But, I mean, it felt like today there was just a wall of chip-related news, whether it was Daimler, the maker of Mercedes, complaining, whether it was the maker of Jeep also saying that they see real, tangible supply chain issues because of this ongoing chip shortage, and it's going to remain an issue for them. We've got Whirlpool that came in with its numbers. Of course, there are plenty of chips that go into the likes of the washing machines and some of the goods that they make. Every area is being affected. What is TI doing in terms of its own investment in itself, its own weathering of the storm? Are they doubling down? Are they looking to expand their overall supply base?
Yeah, no, that's a good question. TI are kind of unique. I mean, a lot of companies have outsourced their production over the years, and that's why we've seen this concentration in Taiwan, in particular in TSMC. TI kind of bucking that trend, and just this quarter, they actually bought a plant from Micron and are going to increase their footprint. They already supply 80% of their own needs, and that's, and they're going to continue to increase their capacity. So they're saying that gives us the control. That means that when we sell something, we sell it direct to the consumer. We can control what we get. We're not going to be caught, out as badly as some of these other companies that are just a cog in the wheel. But that said, they said, look, we've got even more shortages than we had.
Help push us forward. We've got Intel tomorrow. And do you think we're going to get a similar level of opacity?
Intel under Pat Gelsinger, the new CEO, is way more upfront. He talks openly about we have competitive challenges, we're going to be aggressive, we're going to spend, we're going to do all of these things. So I think we'll get a much clearer picture out of them. But for Intel, it's a much different story. Their stock is way lower than what the market has done. People are really concerned about the direction of this company, not so for TI.
Not so for some of the chip-making equipment makers, ASML over in Europe having a record set of numbers and indeed record sort of backlog orders. So such a mixed picture out there. Ian King, he does it all for us when it comes to chips. We thank you so much. Meanwhile, coming up and gearing up for the games, we take you behind the scenes in Tokyo as Japanese capital prepares to kick off for its delayed and suitably subdued Olympics. This is Bloomberg. Honda became the first Japanese automaker to publicly say it will go all-electric by 2040. Now President and CEO of Honda is telling Bloomberg exclusively how the company is positioning itself among its Chinese rivals and Tesla in the EV market and how it plans to achieve its carbon-neutral target.
Our ultimate goal is to achieve complete carbon neutrality by 2050. In order to hit that target, we must make our new cars all non-gasoline by 2040. Of course, we pride ourselves in our engines, but we're now focused on our new target. We're putting our resources into EV and fuel cell technologies. I do realise that US and European car makers are leading the way in the global EV and fuel cell markets, but we still have time. I think we're well positioned to compete with our rivals as we can choose the best ways to achieve our goal.
When you look at other global auto giants, do you think the Honda's goal of going all electric by 2040 is early enough?
Earlier targets were set by the EU and other countries after we set our target to be carbon neutral by 2050. We may have to reconsider our target if we have to achieve it earlier, but for now we intend to stick with our scenario for the 2050 carbon neutrality target.
So Honda has a partnership with GM to make electric cars and plans to roll out 2 new models which have GM's battery platforms in 2024. Could you give us an overview of how you plan to utilize the partnership?
We're discussing the possibility of alliances in different areas if there's any win-win situation for both parties by combining our technologies. General Motors leads in larger electric vehicles, so that's where GM takes the initiative. As for smaller EVs, Honda takes the initiative. Nothing's been decided yet, but we're now in talks with all kinds of scenarios and hope to utilize the alliance where we can benefit each other.
You've shown a pretty open attitude towards forming alliances to ride out the auto industry's once-in-a-lifetime shift to next-generation cars. What kind of companies are you interested in talking to, and what kind of new alliances are you seeking to further strengthen Honda's position in the global market?
We have no specific names of companies in mind, as we still want to discuss with different companies from different areas. For example, we can create new value by automotive and entertainment coming together. The concept of connected cars would progress further if we are combined with information technology companies. I believe in creating new value by becoming partners with non-auto companies. We're also open to partnerships, including alliances, if there's value to it.
Are you talking to any IT giants like Google or Apple?
We aren't in talks with companies that we can name here specifically.
Honda's next president and CEO there. Well, the Tokyo Olympic Games kick off later this week in what's expected to be a subdued event after being delayed by a year due to the global pandemic. Now, there will be no spectators, and the Japanese capital remains under a state of emergency to curb the spread of the further infection. In this week's City Lab segment, Bloomberg's Kurumi Mori takes on a behind-the-scenes tour of where the world's media will be reporting on this very different Olympic Games.
Oh, the vending machines. A $150 maneki neko. It's a lucky Japanese cat figurine. I'm going for the teacup today. The new Olympic Village and other venues, including the Press Center, are in East Tokyo. This district actually sits on artificial land. Tokyo started creating these islands in the 1930s. There's the gymnastics center, and volleyball's right behind that. Oh, the very sad 2020 fan park. 3-on-3 basketball is over there. All right, we made it to MPC, or the main press center. And what's he doing? All right, maybe next time. Going through security. I'm in. The opening ceremony is Friday, but unfortunately, more athletes and Olympics officials continue to test positive, including a member of the U.S. women's gymnastics team and 3 players from the South African soccer team. So we all have to try and stay as safe as possible. I'm double masked today and about to get my PCR test done.
Okay, I'm inside the PCR test center and I got this kit. And now I have to spit, do my saliva test. At the airport, they give you like pictures of lemons and umeboshi, which is super, super sour, to help you salivate, but here there's no pictures.
Last but not least, I got my press kit. We get these at every Olympics and other big events like G7. Inside is a media handbook with tons of info, super important. A reusable seat cover to keep you cool, okay. Lemon flavored salt tablets for when we sweat a lot. Japanese summers are hot and humid. And an Olympics logo furoshiki wrapping cloth. Here's my desk. Time to get to work.
So funny.
Harumi Mori there. What a great piece. We thank her. Now, sticking with the Olympics, Brisbane has been selected to host the 2032 Summer Games. The Australian city won under a new selection process and saw it as the only candidate. That process was overhauled in 2019 to prevent bidding wars among cities. Now, coming up, Will Smith, Jared Leto are among Titan's new backers, with the startup valued at a cool $450 million. We talk with co-founder Joe Parocco all about the fintech company. But let's take a look now at Netflix. The company suffered its worst stock decline in 3 months after the streaming giant got off to a slow start in 2021 and gave a disappointing forecast for the latest quarter. It's hoping new offerings, including video games, will keep subscribers loyal. This is Bloomberg. NASDAQ, well, it's formed a joint venture with Citigroup, Goldman Sachs, Morgan Stanley to establish a trading venue for shares of closely held companies. Bloomberg's Alex Steele spoke with the NASDAQ president and CEO, Adena Friedman, about the development of a private stock marketplace.
We've been operating the NASDAQ private market for about 7 or 8 years. However, as we've looked at the evolution of the private markets, companies are looking to really bring more, private companies in particular, are looking at staying private longer, but also being willing and interested in providing more liquidity opportunities for investors and for employees. And so as we've developed this partnership, we really thought about what is the ecosystem we want to create. We want to bring venture firms and early stage and middle stage private companies into the platform. We obviously at NASDAQ have a lot of relationships with later stage private companies. And then we also want to bring large scale institutional investors and draw them into a fair and high integrity marketplace for private company liquidity. And that's why we chose the partners that we have joining us in this venture. In terms of the long-term impact on NASDAQ, in terms of the public markets, of course, we're always happy when private companies choose to go public and then list on NASDAQ, and having relationships earlier in their life cycle, we do think makes us the venue of choice for that. But really, we also see a huge opportunity in the private company liquidity landscape as well. We would say anywhere from 500 million to 1.5 billion. It's hard to know exactly what the total market opportunity is, but it's very large.
Will that marketplace, though, look any different, or how will it feel any different based on the bank's involvement? Do you have a sense yet?
Well, I would say that we have been doing this on our own, but as we have been talking to the banks, they definitely see more institutional investors being interested in private company shares. They've seen the private companies themselves accepting the notion of liquidity as part of their lives as a private company in new ways. And so what we've been seeing over the last year is continuous market programs for companies that might be thinking of going public through a direct listing, auctions, block sales, all of which really the private companies now are getting more engaged in. Whereas before they were happening behind the scenes, now the private companies are saying, let's create a fair and high integrity way, an efficient way to allow that liquidity to occur.
So on that point, in terms of going public, you got SPACs, you got direct listings, obviously IPOs. I mean, the first half of the quarter was, the first half of the year was amazing in terms of all of that. What's your pipeline look like? What do you see? And where's the interest right now?
So the pipeline for companies looking to tap the public markets is as strong as it was 6 months ago, if not even stronger. So we continue to see just an enormous amount of demand for the public markets as companies are looking at the opportunity to continue to grow and expand their businesses and raise capital in the public market context. So I would say that we raised $111 billion on NASDAQ, the companies that came to NASDAQ in the first half of this year. But even still, the number of companies on file to go public is as high as it has been in the last 6 months.
Are some of those companies not going to be Chinese companies after the recent crackdown over in China about foreign listings? How do you see that part evolving, and what's the hit to the business?
Over the last couple of years, we've actually seen very high number of companies from China coming and tapping the U.S. public markets. The new rules that the CSRC in China have established now make it so that they have to seek approval before they come to the U.S. market. So that is likely to have some impact on, at least in the short term, as they're developing those criteria and helping the Chinese companies understand what they're looking for before they come to the U.S. markets. But we continue to have very active dialogue with Chinese companies, expecting to be able to come to the U.S. markets in the second half of the year.
NASDAQ President and CEO there, Adina Friedman. Now, they're talking about private market access for certain investors, and there's another kind of way we can talk about this with a fintech startup, Titan Global Capital Management, just raising $58 million with A-listers, including Jared Leto, Kevin Durant, participating in the funding round. Titan is now valued at a cool $450 million and aims to be, well, the BlackRock, the Fidelity for millennials and Gen Z. The co-founder of the startup, Joe Picoco, joins us now. And Joe, it's about actively managing your investments. Is it kind of like a wealth management offering for those who don't actually have to be wealthy?
Yeah, you hit it on the nail. Thanks for having me on. We've seen a lot of proliferation in the last couple of years of passive products, which have been doing great, and then a lot of do-it-yourself trading tools. The elephant in the room right now in consumer financial technology is no one has yet to rebuild what Fidelity, what BlackRock, what T. Rowe Price were for baby boomers. That's precisely what we aim to do.
But Fidelity is offering a product for 13-year-olds right now. How much are you worried that those titans of the past can get with the program and take on your Titan?
Yeah, it's a great question. We don't think about it too much, as ultimately a brand needs to be able to pick who's their core demographic going to be and who are they going to build for. The interesting thing is it's not just necessarily offering a product to a certain demo, but have you built it on the underlying technology and the rails that demo requires? And so it's going to cause some really hard decisions at scale for those businesses that you mentioned.
Let's talk about building your rails. Who have you got on board? What talent have you gone to? You, of course, are a man of finance, used to work at Goldman and the like. Who have you brought on as your co-founders, as your engineers, to make sure that you're building the best product?
Yeah, as you nailed it, it's fundamentally people ship software, people ship technology. So our people are everything. Clay and Max, we founded this company in 2018. Ironically, we launched it on 2/20 on February 2nd, 2018. And then from there, we've been looking to hire the best in the business. We're here in New York. Most of the big consumer technology platforms are over on the West Coast. So it's amazing to see us being able to be a talent magnet here in New York City.
Talent magnet that I'm sure you're targeting Gen Z and millennial. Now, we've had on the program Gen Z finfluencers, as they're known. They're across TikTok and the like. A fair few of them are women. How are you looking at that diversity within your own talent pool as well to be able to attract the demographics that you want to come on and use your platform?
Yeah, it's spot on. It starts from the top. Fortunately, Clay and myself were the co-CEOs. We're both diverse, and we're starting, from the bottom floor, brick by brick, building this with being a diverse enterprise. Historically, finance, in particular financial technology, has been dominated by men, predominantly in certain demographics. So you just need to start right from the bottom at the very ground floor, or it's going to be an uphill battle from there.
Yeah, what about female investors? It's interesting that, of course, you got some really well-known investors, sports people and actors. Of course, they're going to be amazing at helping market this product. Ashton Kutcher, we're seeing a picture of Kevin Durant. Did you want a diverse set of investors as well?
Sure, and it's predominantly why our first board member we chose is Catherine Boyle from General Catalyst. She's a woman. It was really important to us to make sure we had a woman right at the top, at the board level. And then from there, Anisha Charya just joined from Andreessen Horowitz. So we're super excited to have a very diverse complexion immediately at our company's inception before we start hitting hyperscale.
And I mean, look, a stellar array of investors. Kudos. I mean, you've got Andreessen Horowitz, as you say, General Catalyst, Box Group. Where do you take this investment now? Is it about marketing? Is it about scaling? What do you want to do with your business?
Yeah, the way we summarize our business is, the mutual fund was a really important piece of technology that's been around for decades. We think it's fundamentally a VHS tape, and that we can innovate and bring the future of investment management forward. So most of this capital is going to go towards making that no longer a VHS tape. And it's what we call internally rebuilding the operating system that powers the whole category.
You want to, of course, also be launching a crypto product. First and only actively managed crypto portfolio you're saying is going to be launched. Crypto in and of itself is sort of, well, DeFi is going to be revolutionizing access to financial investments as well, tokenizing everything. How do you see that fitting in with your model?
Yeah, it's why we weren't planning to launch a crypto product until later this year. Our engineering team built the first actively managed crypto product in history in a matter of 75 days. We just saw hundreds of inbounds from our clients asking how should crypto be a part of their portfolio. There's been a big abdication of leadership in terms of folks shying away from saying, here's how you should think about crypto as a long-term part of your wealth pie. So we felt we had to be there and play that leadership role for our clients as soon as we could.
Joe Bacoco, come back. Tell us about the expansion. Titan co-founder.
I appreciate it.
Thanks so much for your time. That does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow when we are joined by Dan Morgan of Synovus Trust to break down the earnings for Intel and Twitter. This is Bloomberg.